Every single year, thousands of salaried taxpayers file the wrong returns. The result? Penalties, delayed refunds, and quite frankly, a lot of sleepless nights. Welcome to this explainer. Today, we're tackling everyone's favorite seasonal headache, income tax returns. We've all been that stressed out taxpayer, right? Drowning in salary slips, bank statements, and totally confusing forms? Well, if you're a high-income earner, doing it yourself might literally be costing you a small fortune. Let's dive in.
Let's kick things off with a number that's going to blow your mind. Over 40,000. That is how many wrong tax returns were filed in 2025 alone. I mean, wow, right? A lot of folks think self-filing or just clicking through an automated online tool is the easy, cheap way to go. But this number, it proves that perceived simplicity is a total illusion. Thousands of salaried taxpayers are just walking right into traps every single year, completely unaware that their quick fix just triggered a massive headache.
And the financial fallout? It is absolutely jaw-dropping. We are talking about a whopping 1,045 crore rupees in deductions reversed by the income tax department. You know, this isn't some tiny administrative glitch. This is real, hard-earned money being ripped right back out of people's pockets. To give you some context, back in 2020, that number was around 600 crore rupees. So we're seeing this massive, expensive escalation of mistakes that cost your money, your time, and your sanity.
Section 1. The Tax Compliance Crisis. So looking back over the last 6 years, defective and revised returns have just steadily climbed. In 2019, it was around 25,000. Fast forward to 2025, surging past 40,000. And you know what's wild? This spike perfectly lines up with the boom of online tax portals and so-called automated tools. We have more tech at our fingertips than ever, but historical data shows it's consistently failing to handle the complexities of higher bracket salaried incomes.
And the consequences here are brutal. Beyond just sitting around waiting for a delayed refund, people are getting hit with heavy financial fines. We're talking late fees ranging from 1 to 5,000 rupees. Over 100,000 people got penalized for late filing in 2024 alone. But okay, here's the scariest part. Misreporting penalties can reach up to an incredible 200% of the tax due. 200%! A simple slip-up on your form can literally triple your tax liability on that amount. No way!
Section 2. Why automated tools fail.
Okay, so there are two main paths to disaster. Path 1, self-filing. High earners often pick the wrong assessment year or entirely forget secondary income sources like capital gains or rent, or they miss the fatal step of reconciling with their AIS, the government's annual information statement. Then there's Path 2, online tools. Those algorithms blindly auto-select the incorrect ITR form, default to the new tax regime without actually checking your specific deductions, and completely ignore corporate perquisites. Honestly, whether you do it yourself or trust an algorithm, both of these paths carry incredibly high risks.
Section 3. A 22 Lakh case study.
Let's ground this in reality. Imagine a professional earning 22 lakh rupees a year. But it's not just a flat salary hitting their bank account, right? They've got standard corporate benefits like ESOPs, company stock options, and some rental income on the side. Immediately, this is not a basic administrative task. Once you toss ESOPs and property into the mix, the level of strategic nuance you need skyrockets. So let's walk through the 3 ways this plays out. Scenario A, doing it yourself. They file an ITR-1, completely omit the stock options and rent, and claim unproven deductions. Guess what? Defective return, delayed refund, and standard penalties. Now, Scenario B, an automated tool. The platform auto-selects ITR-1 again, defaults to the new regime. The result is terrifying, an immediate AIS mismatch that triggers an official income tax notice. But then, look at Scenario C, bringing in a chartered accountant. The CA instantly knows capital gains and ESOPs need an ITR-2 form. They meticulously reconcile the data, optimize the regime, and boom, a perfectly smooth process, 0 notices.
Section 4. The chartered accountant advantage.
Listen, a CA is not just some data entry clerk filling out forms. They actively protect you from government red flags. They meticulously reconcile your AIS and 26AS statements, making absolutely sure the government's data perfectly matches your filing so you don't get a mismatch notice. They actively document your perquisites to ensure strict statutory compliance. But the real magic? Tax regime optimization. They run a comparative analysis on your specific life to legally minimize your tax burden. They even help plan for next year, completely eliminating the risk of those crazy expensive penalties we just talked about.
And here is the absolute punchline of our 22 lakh salary case study. Because this CA didn't just blindly click through a portal, because they actively optimized the regime and structured deductions correctly, they actually reduced the taxpayer's final tax liability by 45,000 rupees compared to the DIY attempt. 45,000! Think about it. The consultation fee for a CA is just a tiny fraction of those savings. The professional didn't just protect their money, they actively found more of it.
So, what's the big takeaway here? If you're a salaried taxpayer crossing that 20 lakh income threshold, a CA is absolutely not a luxury reserved for the ultra-rich. It is a straight-up financial necessity. Online tools might be great for simple data entry, but they completely miss the big picture when it comes to complex compensation structures. Paying a CA is an incredibly small cost for a massive return in statutory compliance, optimized tax liability, and honestly, total peace of mind. Your time and your sanity are worth way too much to leave to a rigid algorithm or some rushed DIY weekend project. Consult a CA, file smart, sleep easy. Thanks for joining me on this explainer today. I want to leave you with one final question to chew on. Why continue to gamble with your hard-earned cash, risking a 200% penalty and sheer anxiety when the smart solution literally pays for itself?